Hi guys, this is Richard from the Stable Center, and today I will be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. So, Chainlink just made a huge move with SWIFT, the network banks use to send money around the world. They have teamed up so banks can now move real money on the blockchain using the same system they already trust. Think of it like upgrading old financial wires to internet speed. Faster, cheaper, and way more transparent. This test even worked for big banks like UBS, showing how things like mutual fund transfers can run on blockchain instead of requiring manual labor. If this catches on, it could open the door for trillions of dollars to flow into crypto connected systems. This isn't just another partnership, this could be the bridge that finally connects Wall Street to Web3. Also, this diagram shows Swift Chainlink UBS workflow for tokenized fund transactions. It's how Swift, Chainlink, and UBS all connect together. On the left, you've got the banks that use Swift. That's the system they have trusted for decades to send messages and move money. In the middle is Chainlink, acting like a universal translator that takes those traditional Swift messages and converts them into blockchain language. On the right, you've got UBS Bank, which uses smart contracts to tokenize or move digital versions of real funds. So when a bank sends a normal Swift message, Chainlink turns it into a blockchain command that instantly updates UBS's on chain fund. In short, this is how the old school banking foundation plugs directly into the blockchain, with Chainlink serving as the bridge. So, with Cybos 2025 wrapping up, a lot of people seem disappointed with Chainlink's price action. But here's the thing, I'm almost certain Chainlink has brought in a ton of new investors who might not realize that good news doesn't always equal instant price pops. Let's zoom out and take a look at history. On your screen right now are three critical moments for Chainlink, all during its deep accumulation phase when Chainlink was still trading in the single digits. The first major milestone was Chainlink staking, launched in December of 2022. Sounds bullish, right? Yet the price of the Chainlink token dropped over 30%. Then came the massive Swift collaboration in June of 2023, one of the biggest developments in Chainlink's history, and the price of the Chainlink token still dropped over 25%, even actually making a new bear market low. And finally, when CCIP, Chainlink's cross-chain interoperability protocol, officially launched in July of 2023, once again, the price of the Chainlink token dropped over 30%. But here's the lesson here. Whilst short-term reactions look discouraging, the long-term trend tells a very different story. Chainlink today sits over 5 times higher than its bear market bottom. Every milestone builds the foundation for what's coming next. And if you've been following this Wyckoff accumulation game that I've been talking about for a few months now, you already know. There will always be shakeouts to the downside to flush out the weak hands before the God candle to the upside. Just be patient. You have to stop overtrading, stop using leverage, and stop swiping credit cards to chase volatility. All you have to do is simply hold. Because throughout this multi-year accumulation phase, Chainlink has continued to make higher highs and higher lows. That's bullish market structure. And that's how real wealth is built long term. Okay, so let's move into the Chainlink Reserve. The Chainlink Reserve is basically a long-term treasury for the Chainlink network, a pool of Chainlink tokens funded by revenue from both off-chain enterprise deals and on-chain services. As of October 2025, the reserve holds 417,461 Chainlink tokens, worth around $9.2 million. The average cost basis for each Chainlink token in the reserve sits around $22.51. If you look at the chart on the right, you can see how the reserve has been steadily growing since early August, with new Chainlink tokens added in clear steps over time. This shows that revenue flowing into Chainlink's ecosystem is being actively converted into Chainlink tokens and stored on chain, strengthening the network's long term sustainability and creating a transparent, verifiable proof of growth. Simply put, the more banks that use Chainlink services like Oracle's, CCIP, CRE, and even Proof of Reserve, the more revenue flows in, and that means more Chainlink tokens bought for the reserve, more growth, and more bullish buying pressure on the Chainlink token. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. With Chainlink trading sideways and down over the past few days, Chainlink's risk level has dropped to 0.04, which is still insignificant and very low. According to risk analysis, buying Chainlink today is still considered low risk, not financial advice. Okay, so let's take things one step further by adding the regression lines. Regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red peak regression line, indicating that Chainlink is overvalued, and the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Even though sentiment is about as bad as it gets right now, Chainlink is still holding strong at the green bottom regression line, which has historically acted as a key support zone. As you can see on screen, every time Chainlink has touched this line in the past, it's marked major accumulation periods before big moves higher. Now, if Chainlink were to break down below that green bottom regression line, which currently sits at around $18 to $19 per Chainlink token, okay, I'd start to see some causes for concern. But as of right now, people are simply being overly pessimistic just because the price of the Chainlink token didn't explode after Cybos 2025. If you ask me where we are in the cryptocurrency market cycle, I'd say Chainlink right now looks a lot like May to June of 2020, back when Chainlink was trading sideways for months before breaking out and doing a 20x run higher. In the last bull market, Chainlink topped out right at the red peak regression line, and if history even partially rhymes this cycle, the upside is still massive. Sure, there is talk that altcoins might not run as hard this time, or that we might not even see an altcoin season at all, but let's stay objective. Even if Chainlink only climbs to the gray median regression line, by the end of Q4 of 2025, we could still be looking at a $100 Chainlink. So yes, things may look a bit quiet right now, but all it takes is one single God candle. And that God candle is 100% going to happen before this year comes to an end. So moving over to TradingView, in the last video I talked about how Chainlink would most likely find a bottom inside our Fibonacci support area that spans between $17.34 to $20.13. And lo and behold, Chainlink had a strong bounce right off that zone. Now, briefly switching back to the risk and regression analysis and zooming into the green bottom regression line, we can see that the green bottom regression line currently sits at around anywhere between $18 to $19, which is right in the middle of that Fibonacci support area I just mentioned a few seconds ago. That's what we call excellent confluence, two separate models pointing to the same level, suggesting that this correction is either over or very close to being over. The line in the sand for this bull market is actually pretty simple. If Chainlink continues to hold above our Fibonacci support area that spans between $17.34 to $20.13, then the odds are quite high that we will see a rally to new bull market highs, likely above $60 per Chainlink token. But if Chainlink breaks below $17.34, which marks the lower edge of that support zone, then yeah, Houston, we have a problem. Now, from an Elliott Wave perspective, I'm still tracking a 1-2 setup. It's true that Wave 2 retracements are typically steep and deep, like what we saw in earlier in June of this year with the green Wave 2 retracement. However, in a nested 1-2-1-2 setup, each subsequent pullback tends to get shallower and shallower before the series of explosive Wave 3 expansions happen to the upside. Now, zooming out, the long-term primary wave count still has not changed. I'm still tracking this Chainlink bull market topping out with the blue overshooting B wave. In Elliott Wave theory, overshooting B waves often target anywhere between the 1.236 to 1.382 Fibonacci retracement levels, which for Chainlink lands between $92 and $131. And remember, from the risk and regression analysis, the gray median regression line also aligns right around the $100 level. That's another layer of strong confluence pointing to a 3-digit Chainlink before the cycle is over. So let's close this video off by taking a look at Chainlink Dominance. So Chainlink Dominance currently sits at around 0.36%. Right now, Chainlink Dominance is sitting directly on top of the white 1-to-1 trend-based Fib extension support area, which is typically an ideal zone for a bullish reversal. So far, we haven't seen clear signs of a reversal yet, but this is exactly where we expect one to form. Now, if Chainlink Dominance were to lose this white 1-to-1 trend-based Fib extension support area, the next key level to watch would be the white 1 to 1.618 trend-based Fib extension support area, which is around 0.32%. That would be my personal line in the sand for this bull market. But as it stands right now, both Chainlink and Chainlink Dominance are still holding strong above their respective support areas. As long as that remains the case, I'm expecting parabolic moves to the upside over the next few months. And here's the part that really stands out. I haven't seen this much bearish pessimism in the market, even as Bitcoin keeps making new all-time highs. Retail investors aren't paying attention. They are not excited. They are not rotating into altcoins. And honestly, that kind of disbelief is exactly what you tend to see before the next major leg higher. To me, that's a strong sign that the bull market is far from over. Alright, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.